This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning, which means that we've got a weekend coming up and we've got a holiday coming up the Monday after. I think Tuesday is a holiday, but advertising it right here this morning. Well, we're coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Surbi. Guys, hi, morning.
Hi, good morning, Prashant. Morning, Surbi.
Friday never felt better. I can't just wait for the day to end already.
I think Surbi needed the weekend, right? More than any of us.
I heard Surbi's a deep sigh before we started, and I said I should mention that we have a holiday coming.
Thank you so much, Prashant. That really made a difference. I didn't know that. I didn't think of that.
But you know what? I don't know how you guys feel, but generally, Ganpati on the holiday that you get, you're just going from one relative's house to the other, which is of course great. I mean, it's festive season that begins, but it's not really a holiday if you think of it, right? There's so much to do.
At least we won't have to track the mid-cap index hitting fresh all-time highs. At least we'll get a break from that.
Well, I think, there's a clue right there. So let's just actually quickly start by telling you what you need to know as we begin another session. So, the mid-cap and small-cap part of the market, that continues its repair. Why do I say repair? Because, of course, earlier this week, 2 days back, we had that mayhem. But every day, the last 2 days after that session, there has been up move and strong up move, both in the mid and small cap indices. The indices, by the way, once again ended between 1 and 1.5% higher. And that is basically what the focus has been. The Nifty, Bank Nifty, they did not correct that day, that 3-4% cut. And they have done well, but yesterday, for example, many were expecting there's going to be a super day, but it was not. It was a higher session, but more or less flat, nothing large. Now, the big negative from overnight is the fact that oil prices have risen. They've risen 2.5%. We are now past the $94 per barrel mark, right? So that's the big one, and that's the big worry as well. So far, markets have completely ignored it. But it's the single largest item of import for the country. Many are saying, well, we've been paying very high prices at the pump, but the point is for the overall macros of the country, deficits, etc., this is a big item. And it does, of course, feed through in terms of the imbalance there. So I think important to watch, but these are very high levels now. U.S. equities, though, they ended higher. We are about 1% up on the S&P, similar on the Nasdaq as well. The dollar index also moved up strongly. Actually, in the last two sessions, the dollar index has gained about 1%. 105.41 is where the dollar index is now, last night settled at. U.S. data came through hawkish. You had three sets of data: retail sales, jobless claims, and producer price numbers. And all actually were strong, which means that now, although markets are expecting a pause, next week when the Fed meets, they are expecting that, in the dot plots, there perhaps will be one more rate hike sometime later this year. In a way, we got something similar from the ECB yesterday. We got a hike. But that's the ECB's hike for 10 straight times now. But in the press conference, there was some indication that they're perhaps not done, although the market seems to believe that we'll get a pause now. For the Nifty, just to come back and tie all of this in terms of levels, we've been putting out the level of 20,350, and I think we remain on track for that. That's a very near-term level which, not level, but it's a kind of a target to watch out for. Near-term supports come in at about 19,934. The short-term moving averages have all been left behind with the pace of the move, the 10, 20, 50, etc. So the nearest that the support comes in at about 19,930. Bank Nifty, it already has touched the weekly upper Bollinger Band with the move that we've seen over the last 2 days now. A retest, again, something we've highlighted, is about 1% away. The next level is the all-time high, which is 46,369. And near-term support for the Bank Nifty will come in at 45,467. Always better, once again, needless to say, always better to buy on a pullback, buy on a dip, rather than chase the open higher. So that's where we stand at. The Gift Nifty is indicating a 50-odd point higher start, similar to what we had yesterday. Actually, yesterday we had even stronger. We did get a higher open, but then the market moderated through the course of the day, at least on the larger indices. So, Sonia.
Absolutely. And I think, the trend of this market has been buy on dips, right? Despite a little bit of jitters, some roadblocks through the way, it's largely been smooth sailing for the market. And I think today could be the same because you have very positive cues from across the globe. The Dow was up about 300 odd points. The economic data in the US market was quite solid. And you had a very strong debut from ARM, which is, the chip design company. It saw almost a 25% up move in its Nasdaq debut. It's largely owned by Softbank. About 90% of the business is owned by Softbank. It's valued at $60 billion at opening. So that was the big global headline, in the last 24 to 48 hours. Not just that, the US August retail sales data was also better than what the street was expecting. So in that context, macros are looking good. The global markets are back and our own markets as well could be up and about. In fact, even the European and the Asian markets this morning are seeing good 1 to 2% gains. So the mood is looking buoyant and the gift nifty is suggesting a good opening as well. For our own markets, you've had participation come through from different pockets, right? Whether it's metals, Reliance is coming back in a big way. Infosys was the one that led from the front yesterday. So there is a lot of participation across the board. But the flows are thinning out a bit. So yesterday you had the DII sell about 50 crores while FIs bought about 300 odd crores or so. Just two headwinds. One is the dollar index is at a 6-month high. So that is something that may keep a lid on the market's gains, although up until now it hasn't. And the other one, of course, we've been talking about that ad nauseum, is the way Brent crude prices have been moving. WTI, in fact, is on pace for its third straight weekly gain. And Brent is now, as you can see, at almost $95 a barrel. So up until now, it hasn't deterred the bulls. I mean, it's just been on the sidelines. But you never know when catch-up comes through. Perhaps this could be one of the reasons.
Sonia, I put out a piece on this just, I think, a day before yesterday, that correlation between equities and Brent. And what we've learned is that usually the two, can go up in tandem. It's happened repeatedly in, previous market cycles. There are, however, instances when this positive correlation breaks down. Oil went up and the equity market fell. Specifically, 2022, the correlation really broke down because of the Ukraine war. Is it going to be the same this time, or can we continue to rally as oil rallies? That, of course, is a $1 trillion question. But, speaking of oil, I just want to mention that while we've been so busy chasing our equity rally here, I mean, Brent has been quite stunning itself. 10% this month. And 24% since March. That's a 6-month rally, and 24% on oil is not something that you can really ignore too easily. Anyway, just to talk about some of the aspects that Prashant mentioned, Sonia mentioned, there are 3 indicators which have all been bearish from the standpoint of interest rates, if you take a look at that, because the retail sales beat yesterday was a large beat, not a small one. The market thought we'll be flat, 0.1 positive. The increase was 0.6% in August. So that's a large beat. Consumer inflation, wholesale inflation, all of these prints at the headline level have been above estimates. So that narrative around interest rates is still not entirely done. There's still a 40-45% probability of a rate hike in November, maybe not next week, but November. And the US bond market seems to be pricing that in along with the US dollar, because the 10-year is again inching back towards the 4.3% handle. So markets, our market has been ignoring all this for a while, but it's something that we still have to put on the board out there. By the way, speaking of central banks and rates, ECB did a rate hike yesterday, 25 basis points on their benchmark rate, taking that rate up to 4%. Just to come back here, I think what was missing yesterday was the banking participation. When that happens, how that happens is anyone's guess. Banks over the last 1 month have been more or less moving in sync with the Nifty. They're not providing additional impetus or leadership, and we're not getting that kind of FII money also coming in that typically spells great news for banks. So we need to keep watching that space. But mid-caps is where the action really is. The mid-cap index, after that 3% drawdown that we saw in the middle of, the earlier part of this week, it has come back with a bang, and now we're practically about 2.5-3% away from the all-time high on the index itself, the mid-cap index. I'll specifically look out for the sugar space. It was very active yesterday. There are a lot of breakouts happening on sugar charts as well, stock charts, and there's a lot of fundamental news flow. You heard the Minister, Road and Highways Minister Nitin Gadkari speaking, very, very sort of forcefully in favor of biofuels. And that entire conversation, that chatter around ethanol blending, more biofuels, compressed biogas plants that a lot of these companies are setting up, that will perhaps keep this sector in the limelight in a positive way. By the way, there was more commentary. A company like Oil India decided to announce that it's going to go net zero by 2040. They're spending almost 25,000 crores to do that. And specifically on ethanol, they're going to be spending about 8,000 crores to sort of get more active in that space. Just a sampling of the announcements that are coming in. Biofuels, ethanol, this has been a huge talking point and is likely to continue to do that. So watch out for sugar stocks. In fact, speaking of sugar, we're speaking to a sugar company today to discuss some of this and more. There's also a global deficit, so price trends important to track as the sugar season starts off, the festive season starts off. We'll have Atul Chaturvedi of Sri Renuka Sugars join in a little later on the show.
Well, thanks for reminding me that this festive season we're all going to be consuming a lot more sugar.
Absolutely, why not?
What happens to that diet, right? It goes out the window just before.
Kuch meetha ho jaye. It was a Cadbury's line, right? A long time ago.
It's Friday. We can think about that.
Sonia, you should not be the one to talk. Huh? I don't remember any time you having sweets or chocolates or cakes.
Yeah, it's always, Prashant opening his dabba with the sweets and me with the fruits. So,
All right, well, before we go any further, let's quickly tell you what's lined up here in the next half hour of trade today. We have updates from markets across the globe. Matt Orton of Raymond James Investment will join in to discuss the global setup. Our research team gets you a CNBC TV18's list of top 10 stocks for the day. And at 8:30, our market expert, Ajay Bodke, will join in with some perspective and bets that he wants to make.
All right, on the equities front, though, first up we have Chris Wood's view, Chris Wood of Jefferies, who says that greed and fear base case remains no rate hike at next week's FOMC meeting, with the wild card in coming weeks remaining the oil price. Though for now, inflation expectations continue to behave. He says the 5-year forward inflation expectation rate declined from a recent high of 2.53% in early August to 2.33% on August 31st, and is now at 2.42%. Meanwhile, he adds, absent a further oil spike, greed and fear's base case remains that the employment data is now more important than the inflation data.
Okay, well, talking about India, Chris Wood says there is clearly room for a correction in the mid-cap area, most particularly as the continuing rise in oil prices has the potential to create some renewed inflationary noise in India, just as it does in the developed world. Still, he says, by historical standards, valuations for the big cap stocks are not particularly extended. He says it is also the case that foreign investors are not as overweight India as might be thought, given that it is now consensus that India is a long-term structural growth story in Asia, not China.
Okay, let's also get you some money market views. Lakshmanan V of Federal Bank says mixed US CPI inflation this week did little to alter expectations of a status quo for next week's FOMC. He says the ECB raised interest rates by 25 bips close to a 15-year high. He adds a dollar index nearing a year high and crude inching higher puts pressure on the rupee, which is trading in a tight range. He expects the rupee to trade in a range of 82.50 to 83.65 in the coming week.
On bonds, we have Lakshmanan V, who says that bond yields fell sharply to close below 7.15%, which is its lowest level since July end. This after India's CPI for August came in below consensus of 6.83%. Globally, US yields cooled off from highs as market digested inflation data for August. He expects the 10-year benchmark yield to trade in the range of between 7.05 to 7.2% for the next few trading sessions.
A lot of stock-specific action to track as usual. Today it's a long list. We're looking at Infosys, Bharat Forge, Strides Pharma, Sequent Scientific, Siaram Silk, GMM Pfaudler, Patel Engineering, and ONGC. All of these on the back of positive news flow, and we'll tell you more about that in just a bit. The ones that have some negative news around them today are MedPlus and Alchem. All the details coming up in a bit in our top 10 segment.